Yeah, good afternoon, my guys. Vicky Junior Mukulima here. I've been observing the markets closely and how the new entrants are trading on the NSE, mostly those coming via the ZD trader. And I am a little bit concerned. That's why I've been prompted to do this video. There is a number of things that I would like to explain to the new traders. One and most very important is that there is two ways of placing your order. The first one is a market order, which buys or sells as at the best price available at the market at that point. And this one is the easiest way to buy your stock or again sell. That's very good for starters. However, for professionals or people who have taken their time to study the market, study companies, and they are able to tell at which price they would like to buy, then they should use the limit order option, whereby you set your own price. The challenge is that most people are placing orders blindly without even studying the market. They're not looking at what's the available number of shares that are being sold at a certain price before placing a buy order, or how far is your set price deviated from whatever the current price is. And guys are placing some very funny orders. Like, I've been waiting for KPLC to hit Kenya shillings 19 so that I can do my take profit since the day before yesterday. Yesterday it was at 19 momentarily, but there was a lot of supply at that price. I'm amazed to see people bidding to sell their KPLC at as high as 20 shillings 60 cents, whereas the stock opened at 18.75 cents, and it has actually gone down. The last time I checked, it was at 18.60 cents. So it's kind of unrealistic to place your sell price at 20.60 cents, considering the current conditions of the market in matters KPLC. The other thing is you have to understand that you should invest money that you're not very keen on getting back very soon in the stock exchange, because making money in the stock exchange requires patience. So when you enter any trade, you should at least be able to wait for it to gain at least 10% before exiting, because 3% goes to facilitating the transaction. That is, if you're using ZD, you will spend 1.5% as fee when you're buying, and when you're selling again, you need to spend the same. So if you haven't made the 3% to start with, you haven't broken even. And again, you should be patient enough to at least collect your profit at 10% or above. The other issue that I've seen is people panicking just because they see red on their portfolio. This is a common thing, especially I've seen with ZD. When you enter a trade, it actually averages and factors in the fee that you've spent as the cost of buying. So immediately you enter a trade, you'll be in the red. But after some moments or some days, things could readjust, and if they adjust in the positive, then you're in the green and you've made money. Yeah, while at this, I'd like to call upon you to subscribe to my channel, like my videos, let's engage on the comment section, and yeah, get to buy my ebook that will get you started trading. Cheers. Bye.